This interview is a paid advertisement. It was produced on behalf of the company and is considered investor relations activity under Canadian securities law. All statements and opinions are those of the guest and should not be construed as investment advice. Please do your own due diligence or consult a registered investment advisor. Hello and welcome back to the Gold Newsletter channel. My name is Kai Hoffmann. I'm the JR Mining Guy over on X, and of course, together with our good friend Brien Lundin, I'm the host of the Gold Newsletter channel, and I'm looking forward to bringing back one of the companies that we interviewed recently at Brien Lundin's New Orleans Investment Conference, and we got some tremendous feedback on it, so it was really worthwhile bringing that company back. The company is 1911 Gold, and we'll be joined here in a few short seconds by President and CEO Shaun Heinrichs. The company had a tremendous year, 2025. We'll recap a little bit, but of course, we'll give an outlook to 2026. What are some of the catalysts that the company is looking at right now? What could we expect as investors? Because the company raised a ton of money at the end of the year, and I want to know, how are they going to spend it in 2026? So lots to talk about, but before I switch over to my guest, hit that like and subscribe button. Helps us out tremendously to reach a wider investor audience, and we just appreciate it. So thank you so much for doing that. Now, Shaun, it is great to welcome you back on the program. It's good to see you again.
Yeah, great to be back. Still recovering from the holidays, but really appreciate the opportunity to give you a bit of an update on where things are at with us.
Absolutely. Yeah, we spoke, as I just mentioned, at the early November at the Brien Lundin's New Orleans Investment Conference. You haven't been, you've been busy actually since then. You've raised a ton of money, you kicked off a drill program, but let's start very high level for new audience members perhaps. Who's 1911 Gold?
Sure, that's great. Look, we got to always kind of start with the basics in terms of why people should be interested in this story. 1911 Gold is a advanced developer. Also, I'd call it an advanced exploration opportunity. We're 100% focused right now on our Rice Lake property, which is a fully permitted operation. It has existing infrastructure, which is kind of the key here. It's got a 1,300, soon to be 1,500 ton per day mill. In place. We're in the process of putting in a new crushing circuit there, so it's a lot going on for sure. We've got all the underground infrastructure already in place. This is a past producer, so it has produced well over 2 million ounces historically from the 4 mines that sit on the existing permitted mine lease area. All of those areas are fully open at depth. So the big part of our strategy, of course, is to get in there, expand those mines, grow the potential, show the mineability of each one of those mines, and build really a successful long-term production profile for this project. It sits about 3 hours north of Winnipeg in the province of Manitoba, right on the kind of on the eastern side of Manitoba, about 100 kilometers to the west of the Red Lake camp. We sit on the same Birch-Uchi greenstone belt that defines that entire camp, which has well over 40 million ounces and has multiple owners. But we have the entire belt in our area to ourselves, well over 62,000 hectares. And beyond the permitted mining lease where we're predominantly productive or operating right now, we have a number of historical producers out in the southeastern part of the project area. And investors will definitely benefit in the long term from seeing us advance those permitted or those projects towards through permitting and into production over the next 4 to 5 years as well.
No, fantastic. Really good overview there, Shaun. You touched on some of the highlights, of course, here. We need to talk about the major de-risking event that you saw in early December. That was the financing that you successfully closed, $23 million. Run us a bit through the rationale behind it and what kind of doors does it open now?
Sure. Look, the thing that we took away is we did a financing in July. It was roughly a 13 plus million financing, brought in several key institutional shareholders. Eric Sprott himself topped up on his financing and came in. But coming out of that and coming through meetings in September and October was the sense that shareholders really wanted to see us be aggressive in advancing the project as quickly as possible. The targets that we had developed over the drill program that started in October of 24 and had gone kind of more or less throughout 2025 had identified a number of key exploration targets which would significantly grow the production profile of the existing underground mines because these areas basically ran within 300 to 400 meters in parallel to the existing mine infrastructure. So we wanted to see what we could do. We wanted to see what kind of support was out there in the market for us advancing more aggressively on the exploration program, bringing in more drills in 2026, getting ahead on development as quickly as possible, always with the idea of getting this into production in 2027. We found a lot of support from the existing shareholders that have participated in the July financing. and from our other existing shareholders, and we're able to successfully raise an additional 23 million in December to support our drill program. A lot of that is earmarked for development and underground drilling, as well as an exploration program in one of the regional target areas, which we announced also in December, which was the Ogama Rockland resource, which has a 337,000 ounce 8 gram per ton resource. So that's where those funds are going to go, predominantly into the main shaft underground mine, which we talk about a lot, developing areas off of level 16, re-accessing level 26, which is over a kilometer down, but accessible by hoist. So you're there in no time. Rehabbing that, putting drill pads into the level 26, drilling down deeper into the resource, expanding the downside or the down potential, as well as continuing to add ounces in the existing exploration targets that we'd been drilling through October of 25 or 24 through 25. So that's where it's going. By 2027, those will start to fold into an updated resource and ultimately into a PFS.
Okay. What is the spend split? Like, how are you planning to spend that budget? You already gave us a bit of a breakdown, but I just want to be a bit more specific. Like, how much are you spending on, let's call it CapEx or rehab work versus like exploration spending, for example?
Yeah, sure. No, it's look, we're targeting around 10, 12 million of development out of the funds raised. And keep in mind, we still had cash on hand when we went into that financing, and we were getting proceeds from warrant exercises. We had a bunch of 10-cent warrants coming in through the month of December. So the last announced cash position we had was 26 million, which we put in that Ogama Rockland resource or that drill program update that we put out in December. So I'm going to largely reference that, but that 26 million is going to go into surface drilling. So we're going to get 2,200 meters done initially on Ogama Rockland, which is that resource. That's $1 to $2 million there. We'll follow up that program probably in the fall. More importantly, we'll be in the underground mine doing that development, which I stated earlier, which is roughly around 10 to 12 million. That's putting in, several thousand meters of ramps into test mining target areas that we're looking at, both in the shaft mine, but also now more recently pivoting a little bit towards the hinge mine, which is one of the ramp mines, the biggest ramp mine on the project area. So putting in that necessary infrastructure, we've got about 8 to 10,000 meters of delineation drilling. We might expand that. Now, delineation drilling is just tightening up the drill spacing on our existing resource, so taking it down to 15-meter spacing. That's probably around $4 to $5 million on that program. And then the remaining $6 to $7 million, I'm just doing math in my head, $6 to $7 million is going to be on exploration drilling in the underground and resource extension and infill drilling out of those funds. We have additional funds that kind of came in the month of December that will help with any corporate spend, marketing activities, and those usual things. But the bulk of that money will be going into that drill program and that development.
No, perfect.
Of the development, I think, just to be specific too, there is rehab in there. Some of that is putting in ramps and access. Some of that is repairing escapeways. The areas of resource areas where you're putting in drill bays, putting in infrastructure that needs to be repaired. But that's only really around 2 to 3 million. The rest of that is putting in the necessary ramp infrastructure to support mining production in 2027.
Just to clarify, when you say mining production, you don't mean test mining, bulk sampling, you mean proper production, correct?
I mean proper production, but some of that is going to be leveraged off of areas that we're developing for test mining initially. So we'll just test mine and then we'll continue on in those areas. So it's a bit of a mix, but predominantly everything is focused around getting into production in 2027, and nothing we do in 2026 is going to be a waste with respect to what we're going to plan to do in 2027. So we're putting the foundation in for that work that will take place in the following year.
Like, what are the biggest ticket items? Meaning, like, what's the biggest hurdle that you need to overcome to get to production? Like, what's your, what's your area of most concern, perhaps? Maybe something, like, for lack of a better term, that gives you sleepless nights or something like that.
Not sleepless nights, but timing. Timing's always slipping and changing, and if we do this, we want to do it. We want to do it properly. We want to do it successfully, and so one of the biggest things for us, which we haven't talked about yet, is that preliminary economic assessment report, which should come out this month. That's something we did intentionally to guide our program. We could have skipped and just waited to do a PFS at the end of 2026, which is what you often see with these advanced kind of fully built operations that are restarting. but we wanted to have a targeted development program in place, and that was going to be fed off of this PEA that we've developed in conjunction with AMC, who's the kind of the engineering outfit that's working on it with us. So what I find though is as we bring people in, and we've ramped up our on-site personnel significantly. I know I mentioned in December, but I'm extremely impressed with the quality of people that we've been able to attract to this project. But as they come in and they try to temper our ambitions a little bit, or at least coach us on what how things need to be done correctly, we need to slow down a little bit. Nothing has slipped in terms of our ultimate timeline. We still think very confidently about, you will see mining in Q1 of 2027. You will see mining in 2026. But you will see, we will definitely be pushing to have production in 26 related to a test mining project areas, 1 to 2, maybe even 3 different areas, just to get, good coverage. But there are things that we need to kind of focus on a little bit better in terms of that development and making sure that we've got a very stable infrastructure in place. And I find that tends to make things that we were hoping to do, in 2 months, now it becomes 4 months. But in terms of the actual risk, nothing keeps me up at night with respect to the operations. The only thing that keeps me up at night is really, what's going to happen over the weekend, and what kind of world events are going to change, all of which seem to be positive for gold, but things you always have to be very conscious of. So that's what I worry about more, and making sure that my team has the resources to do the plan that we want to execute on. So.
Well, gold is trading over $4,600 an ounce. You just, hinted at it. Like lots going on in the world of precious metals, silver as well. Like how is the price changing your business plan? Maybe your attack plan here. Like you already mentioned, your investors want you to be more aggressive. But are you changing the business plan at all? Like, are you changing things up, moving things forward that you weren't considering just because of the function of gold price?
Surprisingly, no. It certainly makes it all look a lot better, what we were doing, but we were already pretty ambitiously pursuing the idea of opening up as many of the mines as quickly as possible. Like that would be the one thing that you might change. You might look at, say, the Cohiba mine, which was a small ramp that only produced a limited amount of ounces, but is open, but it's small in terms of ultimate width. You might want to just push that off, but we always kind of thought in our head that, look, even 50 tons coming out of that mine is 50 tons going to the mill. It's 50 tons we don't have to pull out of the shaft mine. That gives our guys more time for delineation, drilling, and development, which is where this operation fell down, back in 2013 and 2014. So we are going to continue to focus on leveraging all the opportunities on the mine lease area and opening up areas, even within the shaft mine. We talk a lot about the exploration target areas that we've developed, the Sam West, the Sam Southeast, and now the Shore target areas. And those are all areas that have the potential to feed in the upper part of the mine. So I'm actually going to take back my answer and say that one thing it has changed is it has pointed out to us that we probably want to do even more drilling than we originally intended by bringing those exploration targets through inferred right into indicated as quickly as possible, so that those can actually have the potential to feed our mill on a much shorter time frame than we originally thought. And what the gold price has done for us and many other projects, obviously, is it's provided us with capital, and it will continue to provide us with capital as long as we continue to deliver on what we're doing. Now, I'm not saying that capital is necessarily share capital. That can be all kinds of different capital, but it certainly brings a lot more investment to the project. So we feel a little bit less constrained in the approach that we're taking in order to maximize the production, sticking to resource grade. We're not dropping cutoff grades. We're not dropping our target grade coming out of the mine or doing anything like that, but we are looking at potentially expanding different project areas as quickly as possible. We were always looking at the regional and thinking how quickly we can bring certain projects on in the regional area. That has not changed. But I think, again, going back to the capital, there's going to be more capital to accelerate those projects over the next 2 to 3 years, which could bring those on a lot faster.
Absolutely. No, let's just hope the market stays where it's at. I don't see why it would turn right now. Maybe a correction, but I don't see a trend change at all in the future.
Yeah.
So,
well, I think, look, we all pontificate on what's going to happen with gold, but I just think right now, the way the institutions have woken up to the value of having a significant position in gold, obviously the world uncertainty is just continuing to reinforce that. But I think the price performance of gold, and obviously silver and the other metals that are catching up and re-rating quickly, but the price performance of gold, even when it's under pressure, the resilience it shows around $4,000 an ounce gives people a lot more confidence around holding it. And that's only going to continue to improve. So I think we're at a different price point. The costs related to these mine operations have not gone up to that level. They've obviously increased as they traditionally do, but they're nowhere near the price appreciation on gold. So the margins are significantly better, and you're seeing that in the more advanced projects that are already out there. But it gives projects like mine the ability to put forward a financial model that looks extremely attractive and is easily achievable.
Yeah, I was going to ask you actually about cost creep and inflation when it comes to like drilling costs or just capex in general that you're putting in right now. Do you see cost creep?
We do. What I'd say we continue to see more so is just time delays. Things are not available. Like, we've got more underground equipment on order. We had a couple of pieces deliver in December. We had to wait 4 months. That was used equipment. Why does it take used equipment like 4 months to get to site? I do not know. But the other stuff that's coming is new, and it's kind of 6 to 9 months out. And so we do see that. We, like I said, we are putting a crushing circuit in, and that's probably where we'll see a little bit more of the impact of steel price creep and those kind of factors. I'd say labor is more expensive, but look, it's deservedly so. I think most of us could argue that the cost of living in this country and in the US as well is our wages have not kept up. So we are seeing that kind of increase, but it's nothing that's not manageable in these operations, and people work incredibly hard for that, and we appreciate that. So I don't think overall we see significant pricing increase, but obviously we'll start to see higher costs, all-in sustaining costs for these types of operations going forward. But it's still going to be a magnificent margin on the gold price. So not too concerned at this stage. We are building resilience down. I will just qualify all that by saying we're building resilience down to that $2,000 ounce level. And as you know, mining companies can pivot. They can change the cutoff grades. They can do things differently. Even a mine like this, which is challenging in terms of being high grade, narrow vein, being deep, you can still take things narrower, keep things tighter, cut down production a little bit. You can do things to make it so that it can operate below $2,000 an ounce, and it certainly has in the past. So.
No. You hinted at the PEA again. Like, let's talk about it real quick, because I'm curious. Like, what are you guiding the market towards? What should we be expecting? What kind of gold price assumptions are you making in the PEA as well? What can you share with us? Like, what should we be expecting from that document?
To be honest, I can't really share much, and we're trying not to provide any guidance. All I can say loosely is that you're looking at a fully built operation. There is capital in there. It's capital we've identified as no different at this stage from what we've generally been saying. Gary and I have been kind of saying, we're between 35 and 50 million. You're not going to see anything different from that. You're going to see much more specific uses of capital now, instead of us arm waving about what we think it's going to be. But was happy to see that when we built it from the bottom up, that's where we ended up. And that includes the crushing circuit. So that includes a big spend, like a $12-14 million spend on a very optimized, very fit to purpose crushing circuit, which this operation has suffered from in the past. That does include fixing a lot of issues in the mill that had been there for well over 20-30 years related to water, where you're using water, where you're using pipes, optimizing the electrical, optimizing the concentrator circuit, a whole bunch of different things that we really benefited from having a very experienced mill manager show up on site. And really taking a hard look at everything and bringing in people around him to fix that. But that's all in there. We do have a significant tax loss pool, over $310 million of tax loss carry forwards and capital development pools, which you amortize against your income. So you're going to see several years of no tax paying, which definitely helps your IRR and your NPV calculation. So I'm confident that it's going to be a good model. What I do caution people, and what I've been saying all year long, is none of the PEA is going to include the upside potential of Sam West, Sam Southeast, Shore, Ogama Rockland. None of that stuff's going to be in there. So whatever you see in there, you have to take into account that the next resource update, which is going to be out in kind of late 27, probably 26, is going to look completely different, and that PFS is going to be quite different as well. It's going to be much more refined. It's going to show some growth opportunities. We are going to do our best to show the upside opportunities around the project, so people can start to see, okay, let's say it's like, this is not a real number, but let's say it's 400 million. Okay, well, with all these other things, what does that mean? That's probably at least 800 million. That's your starting point. And then you kind of go from there. And again, it's also a project. When you see the PEA, it's not a project that's going to be in 10 years. It's a project that's going to be in 1 year. So it's very real, very tangible. If you want to come to site anytime, you're going to see this as a very real operation with very real people doing very hard work to get this going.
I'll take you up on that offer there. So
that'd be great. We appreciate visitors.
I'll take you up on that. But Shaun, maybe just to wrap up here as well in terms of catalysts. Of course, lots of drill results pending, I'm assuming as well. Runs a bit through what can we expect the next 3 months, and let me know if we should sit down in Vancouver next week when we have our studio up and running on the floor of the show.
That'd be great. Look, we're pushing hard to have a big update. Obviously, I'm mildly optimistic that we'll have the PEA done by then. But things, like I said, timing is just never in our control, and it could very well be the week after. I do promise it will be January. That's all I can promise for sure. But you're right. There are many catalysts. We have been drilling. We've had 2 drills underground since October. The problem, which I kind of alluded to before we started recording, was just those drills have been doing a little bit of this, a little bit of that, because we've been trying to advance a number of areas. So trying to stitch the results into a cohesive news release is our current challenge, but we do expect to have our first batch of drill results likely related to either shore, because we've been doing underground work on shore, maybe some SAM Southeast from underground. We might put some of the confirmation drill holes out, or we might wait till we finish all the delineation drilling on the targets and then put it all out as one bundle so people can kind of see a complete message. But we should have something out in January again. We have the AUMB Rockland project, the first ever drill program since 2018 going there. We're looking at expanding and extending the existing resource, and then we'll republish that resource, that 337,000 ounce resource, probably by early Q2. And then in terms of other catalysts, you are going to have an ongoing stream of underground exploration results throughout the entire year. You are going to see a return to the regional, the more advanced regional target areas like AUMB, like Central Manitoba, towards the end of the year, but that's kind of a Q4 item. We'll be looking to bring those projects through to development and into production as quickly as we can. Obviously, there's a series of things to do there. You are going to see the commencement of some test mining activity. You will see some commencement of milling once we have the crushing circuit completed, which is likely going to be later than I was hoping. We are looking at ways to run the mill a little earlier, but on the down, to kind of guide low at this point, I'd say let's wait for the crushing circuit to be done, which does put it closer to Q4, but you will see mining. So we will be mining. We can talk about the mining throughout the year, and you will see us reopening other ramp mines within the mine lease area. Right now, we talk a lot about True North. We talk a little bit about Hinge, but there's also 007, which we need to dewater. The nice thing about True North is we didn't need to dewater it. It was ready to go. But we do need to dewater Hinge. We do need to dewater the lower part of the lower part of 007. Cohiba, I think by the end of the year, you'll see us get into Cohiba. And I think beyond that, those would be kind of the main key catalysts. We will continue to do some exploration drilling on the Sam West, Sam Southeast target areas, a little bit from surface even. And we will do a limited lake ice drilling into the shore target area, because we had to wait for the winter freeze up so we could drill the upper parts of shore. It's never been drill tested. So that's all kind of sitting ahead of us. All of those have the potential to really expand the size and potential of the existing mine. And then obviously, if we talk about the regional, you're talking about long-term growth of the whole production profile, going from that 70, 80,000 ounces to 100,000+ ounces with those other resources coming in.
No, fantastic. Yeah, lots to keep track of, or keep following up with. It's a lots of areas, lots of targets, lots going on. So I'm really excited to keep chatting with you throughout the year here, Shaun. Looking forward to that.
Me too. But look, I just say one thing. Look, I know we're trying to keep it tight. I would just say, look, there's never been a more exciting time for me and for the people at the operation. Having Eric kind of coming fully on board in late Q4 of last year has been. I don't want to overstate it, but his impact on the operation, the morale, the focus of the team there, and his input into senior management now that he's more kind of tied into the operations. I can't really, it's been kind of amazing to see him work and see him relate and work with people. And I look forward to kind of advancing this project with him over the next, several years, really. So it's a really good time. We're going to work very hard this year. I'm going to be around. We're going to do lots of these updates. We'll try to keep you as in tune as possible as to what's going on.
Fantastic. Awesome. Shaun, really appreciate it. Thanks so much for joining us here on the Gold Newsletter. Really valuable update. Much appreciated. Can't wait to do the next one here. Maybe in Vancouver. Maybe we'll squeeze it in there on the Monday night or so.
Sounds good. Yeah, definitely. All right. You got time. I got time. Don't worry.
Okay, perfect. We'll figure it out. And everybody else, thanks so much for tuning in here to the Gold Newsletter channel. I hope you enjoyed this conversation with Shaun Heinrichs. He's the president and CEO over at 1911 Gold. As you just heard, the company has a lot on the go. PEA is coming out next. Lots of drill results pending as well. And of course, lots of updates to be expected over the year. They're going into production in early 2027, so mining will kick off in 2026. Make note of that and follow along. And if you haven't done so, hit that like and subscribe button. Helps us out tremendously. Reach a wider investor audience, especially if you're already an investor in this company. And we much appreciate it as well, of course. So thanks so much for doing that, and take care out there.